Good day, Industrial Advisors listeners, and thank you for tuning in. If you have not subscribed, please do so by clicking subscribe wherever you podcast. Click the like button and hit the bell if you want notifications of when we put up new content. Leave us a comment about anything we discuss here today or general comments about the show. Now, let's get into it.
Welcome to our Industrial Advisors podcast. You have Bill Condon and Matt McGregor here, and we're going to go through the three most dynamic things impacting the industrial market and one opinion. Talk a little bit about our third quarter recap. So before we jump into the three most dynamic things, let's talk a little bit about absorption and where we're at.
Well, I think the most important thing to talk about is I watched a lot of football this weekend. And one particular game I watched was the Magnolia Eagles, coached by none other than Bill Condon. I think they're 8 and 9-year-olds, and I'm going to call it out, and I just think you're paying a couple of those players.
Yeah, don't tell anybody, but yeah.
They look like the Patriots of old, back there throwing 20-yard passes when no other team knows how to pass. That was impressive.
Yeah, so when I tell you that I'm like, we're on a conference call or something, I'm actually really drawing up football plays.
Oh, I know. So that secret is long out of the bag. We certainly know you are an awesome football coach and spend a lot of our quality time designing wonderful plays that I witnessed. I think Bill's son, 8-year-old, last week had 255 rushing yards. Pretty impressive.
Yeah, he gets that from his mom. Yeah, no, it's been fun. I love coaching and all those sports, but
for sure.
Love the industrial real estate market too. And we've had an interesting quarter looking at where we're at year to date. There's some interesting things over our vacancy rate for the Puget Sound region's down to right at 4%. It was closer to 5% a year ago at this time. And some interesting little sub-market changes that we've seen as well over the year.
Yeah, it's interesting to see that it dropped significantly, almost a full basis point, 4.8 to 4%. It had been rising, which was concerning, and all of a sudden, wham, we had quite a quarter, massive activity out there. Despite some rough things going on in the economy, we are seeing a lot of demand. But some interesting things to note from this, that I would say for the first time, maybe in our career, South Seattle is the highest vacancy rate out of the entire region at 5.2%. And again, about a full point bump from the previous quarter. Why do you think that is, Bill?
Yeah, I think there's a lot of, as we've seen over the years, a lot of those tenants that are expanding have just gone south, right? We see it progressively get further and further south. And you look at Pierce County, for example, that vacancy rate went from 7% down to 4%, right? So that was the biggest drop. I think a lot of those deals coming out of Seattle are potentially going down to Pierce County, and there's also great labor down there.
That's right. I will say in South Seattle, I always said those buildings were 67 years old, and now those buildings are getting older. There's challenged assets. They're pretty old that just have always leased, so why do anything with them? I think if you have a new product in South Seattle, that's proven to be a good model, right? I think some of these age assets are really going to have to take a look at what to do with some of them because guys are having a tough time, penciling say $1.50 shell rate on a building that has a lot of functional problems.
That's right. And there's a lot of good product that's still left as you go into Kent and you move further and further south into Sumner, into Tacoma, into Fife. There's still good product left. And those markets I feel are close enough in where people still can commute. I do think that overall, leasing velocity is still really strong in our market.
Extremely.
The numbers prove it, but rents are continuing to decline. Vacancy or annual increases have now gone to 4% as what I would say is minimum. Whereas
on the whole West Coast?
Yeah, last year it was 3%. Now you're at 4%, and you have some markets pushing 5-6%. So it'll be interesting to see when that happens here. But things are moving in the right direction on the leasing side for sure.
That's right. Total absorption for the year is just under 5.8 million square feet, with Pierce County, of course, once again coming in number one at just under 3.7 million feet of the 5.8 million. So great absorption year. It doesn't come close to the 11 million feet last year. And let's just say add a couple million more feet before the end of this year. Maybe we end up close to, 8 million feet. That's the second best year ever.
It is, and I think that number would be higher if there was more product available.
That is true.
If you're looking for 350,000 square feet or above right now, you don't really have any options. So if we had a bunch of buildings that were available, I think that absorption number would be even higher. So yeah, another phenomenal year so far on the leasing side, and I think that momentum's continuing into Q4.
That's right. And I actually think we're a little shy on under construction, seeing last year's absorption, 11 million feet. Let's just say we get to 8.5 million feet this year. we've only got 6 million under construction as spec, about 7.1 total, but of spec, you've got about 6 million feet. So again, we're going to continue to see the vacancy drop. And based on the construction numbers versus, I'm not sure why we wouldn't continue to see great rent growth.
Yeah, all the fundamentals are there for that. So let's jump into the three most dynamic things that we're seeing. And why don't you kick us off?
Yeah, the first one is that we're going to see at least 2 spec million square foot plus buildings built in our market for the first time ever. Bill and I were talking before the show, what the largest spec building ever in our market was. We believe it was the Prologis building at the time, A&B. I think they called it Riverfront in Auburn.
Yeah,
Starbucks building.
Yeah, so I remember that building because if you remember at the time they built that building spec. It was 800,000 square feet.
It's huge.
That was a huge building for us. But the reason I remember it so well is there was a 3PL a bid for that account, that account that went into that building.
That's right.
And I had one of the final 3PLs. No, that's who went in.
Yeah,
I didn't have them. I had somebody else.
Of course. So back in those days, we were all running with a different 3PL.
Totally. But I was it was like my second or third year in the business.
Yep.
So I was running with an 800. Oof. And that I really wanted that deal to go there.
I'm sure you did.
Yeah, they made it all the way to the end and then did not get selected. Yeah.
You remember that building?
I sure do. Yeah. But yeah, that happens in brokerage. But yeah, I remember that well. That leased, but that was, from our recollection, the biggest spec building that we had seen prior to this year.
Yeah, it's amazing that it's taken this long to beat that number, but we have 2 of them that are going to be delivered, at least 2, I say, because obviously there's several other being considered for spec, but we've got 2 that are going to go under construction, 1 under construction and 1 going to go under construction. And I think it's a great move because there are none available on the West Coast. So if it's timed right, a lot of those, as million square footers, are looking at the IE, they're looking at Seattle, maybe they're looking at one other area. But if it's timed and you can't find one down there, then Seattle's going to grab another one.
Yeah, and I think the trend is up and down the West Coast, right, is tenants have gotten bigger, buildings have gotten bigger. And in our market, it was rare in the past to see a building or a couple deals get done over 500,000 square feet. Now we're seeing multiple deals like that. So everything's changed in our minds for the better. I think the other thing, the second most dynamic things impacting our market is just the huge contrast right now between where the leasing fundamentals, where the leasing velocity is versus where the capital markets are right now.
Gosh, what a difference.
Yeah, and it's been a really big change in starting on the capital market side. We talked about where leasing's been at. Leasing's as good as we've ever seen it and continues to be really strong and will be strong in the fourth quarter. Capital markets, with where debt's at and where debt has gone, has basically hit the pause button. And I would say overall in the last, call it 4 months, cap rates because of debt have gone up 1 to 1.5 basis points, right, from where we were.
That's right.
And now we were at a record low from a cap rates standpoint. Pricing was at an all-time high. So things needed to adjust. But boy, it's been a change and it's happened really quick.
I would say I agree with you. It's fascinating to see the contrast between those two, because normally if one's really healthy, the other one is healthy. And with so much demand and rent growth and annual increases, greater annual increases and reduced TIs and such a vibrant leasing market, you would think capital markets would want a piece of that, right? But they can't figure out the debt side. And so that's just an absolute mess. And then you overlay it with basically construction finance is frozen.
Yep.
So what's going to happen with these land plays that can't get construction financing for speculative construction?
Yeah. A lot of those spec buildings will go on hold. But yeah, on the capital market side, it's really interesting because I think you just have a lot of groups on the sidelines saying, okay, we need to hit pause until we figure out where exactly we are, where the market is. But for the first time in our careers, we're seeing Class A product just not trade.
Absolutely.
And it's not, there's capital out there for it, but that capital has different pricing expectations than where the sellers are right now. So it's going to reset. And I think the markets that we'll see trades in, I should say, are markets like the Puget, like Inland Empire, Northern California, all the New Jersey, Florida, the markets that have great fundamental, but we're not going to see those trades until that reconnect happens between buyer and seller and pricing gets figured out.
Yeah, I totally agree with you. And it's interesting you say maybe the market shifted, say, 150 bips in cap rate. I think even more significantly, even if you say the cap rate and everybody agreed, let's just say it's 150 bips, I think you've got 80% of the buyers on hold, even regardless of that cap change, if we all agree that's what it is. You've got a lot of guys just sidelined that are not playing. Right? Maybe they would play at a 200 bip change, but they're not playing at what we're saying market is. They're just sidelined for a while.
Yeah, and I don't think they know where market is. They don't know where it's going still. You're right. The depth of buyers is significantly decreased from where we have been, but they'll come back.
Of course.
They'll come back once
Because the
things reset.
fundamentals are there.
That's right. The
Right?
fundamentals are there. And the question, I think, for a lot of those groups are how long, where are we at in this cycle, and when do we jump back in?
That's right. And we have to find a rational point, because when you say a building is more valuable with a 2-3 year lease than a 10-year, there's something wrong, because investors typically want great stability where they understand their return. Now that's not valued, right?
That's right.
So the market, what I would say, is because of that, a bit irrational.
Yep. You look at it, you look at the leasing fundamentals, which is why it's such an interesting point right now, is there's going to be continued rent growth, and it's going to be more than 4% next year, right?
That's right.
So yeah, you have these investors that are looking at it near-term rolls better and willing to pay more for those buildings still. So we'll see if that changes.
Mostly going back to your point, if you're going to have some buildings that aren't going to be built because there's no construction financing into a market that we already said we don't have enough product versus demand under construction, you're going to see some big rent growth in some of those sectors because of that.
Absolutely. And that leads us to a third most dynamic point, which is the West Coast vacancy and demand, the strength of those markets. Vacancy in the Inland Empire is under 1%, has been for some time. Rents continue to go through the roof there. Vegas vacancy, 1%, Reno, 1%, and Seattle's at 4%. So you have all these West Coast markets with leasing fundamentals as good as they've ever been.
That's right. And I think that's driving a lot of what has for the last year, because Seattle, and we have a good lean vacancy at 4%, but we're not one and sub one, 5 or 6 other markets on the West Coast. So you're seeing some of those larger requirements popped up here because we just don't have the ability for them to find homes down in California and other markets.
Yeah, no, that's right. So we'll see how those markets continue how they finish out the year. But in talking with our partners in those particular markets, fundamentals are great there as well.
That's right. And then the last one, what's our opinion, Bill? What's our opinion? 3 dynamic situations in our market and one strong opinion coming from Mr. Condon.
The opinion is we can't continue this growth without labor, right?
That's right.
And labor is a really hot topic right now. People have changed the way they work, right? And how people adjust to the labor market and which markets do it better than others are going to be the ones that win.
Yeah, I don't go. It used to be the 3 L's were location, and now everybody's just labor. And so that's what's driving the location and the site selection. And I don't go a day without 3 or 4 conversations with clients that cannot find workers, or complaining that, the workers want to come in 1 day a week and you better have a bed for their dog. And just a dynamic shift in culture that really was through COVID that, man, it is really killing production. It's affecting supply chain, manufacturing, distribution. It's going to be interesting. And I agree with you. It is the fundamental that will pause growth in the industrial markets if you can't get labor.
Yeah, like to your point earlier, we get asked first and foremost with our occupiers about labor, right? Imagine that contrast to when we started in the industry. It wasn't, labor wasn't even a top 5 thing for them, right? It was there. And it was more of a rate discussion. And now it's all about labor. What's the labor base around there? And that's how companies are making decisions. That's not going to change.
No, and we're leading every conversation with a labor study.
That's right.
Which is unique. I don't think if you rewound it 5 years ago, those labor studies were reserved for those huge requirements, right? That you brought in some specialists that did that. And now everybody better know how to do a labor study and be able to produce that even for a small deal.
That's right. That's right. So it's going to be a really fascinating fourth quarter and year end. I think that, again, the leasing market will finish strong. We're going to see a lot of good deals. We'll see rent growth continue to climb, annual increases continue to climb, and the capital markets will be a slow. Traditionally, the fourth quarter is by far and away the hottest quarter for industrial sales and investment sales. That's not going to be the case this year, simply because, to our point earlier, the buyers aren't there.
That's
and
right.
The sellers aren't sellers where the market is right now. So a lot of groups on the sidelines. When that resurfaces will be interesting to see, but it should be a very fascinating fourth quarter. And like we talked about, a great leasing quarter.
That's right. It's going to be a phenomenal fourth quarter, and can't wait to see where the Magnolia Eagles end up this weekend facing another great undefeated team.
That's right. That's right. 4-0, looking to go 5-0.
That's right.
Yeah.
Thank you, everybody.
Thank you.